This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan, Colorado. I am Cesar Delgado. The acreage report is lower for corn and beans. Acreage is higher because of lower supply of nitrogen. We were talking about it with Ryan Wager from Bolt Marketing LLC. The corn acreage is higher because of lower supply of soybean to China. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest on KSIR in Fort Morgan. The acreage report is lower for corn and beans. Acreage is higher because of lower supply of nitrogen. We were talking about it with Ryan Wager from Bolt Marketing LLC. Hey Ryan, how are you?
I'm doing great, Caesar. Yeah, happy to jump on with you here and discuss the markets a little bit. Everything's going well here. We're just kind of waiting for things to dry out so we can get in the field. We got a little bit of late season snow yesterday, so it looks a little white outside today, but it's supposed to be pretty nice from here forward. So we'll get her melted off and hoping to get some planters rolling here in the next couple weeks.
Winter don't want to leave.
No, no, it doesn't. Yeah, but as far as the acreage report goes, I think everybody was kind of looking for a little bit of lower corn acreage and increased soybean acreage due to the high price of fertilizer, specifically nitrogen fertilizer, which is obviously, as you know, a key component in the production of corn. But the USDA came with a little bit of a surprise. They actually had acres towards the high end of the pre-report trade guess, coming in at 95.338 million. That was about 1 million acres more than what was expected going into the report. And soybeans on the flip side, they were at 84.7 million, which is about 1 million acres below what was expected going into the report. Now, still, we're still looking at about 3 million plus acres fewer of corn than last year, and about 3 million plus acres more of soybeans than last year. But so it was a little bit of a surprise in the acreage report as far as the total swing, but I think maybe that had a lot to do with when the surveys went out. Surveys for these reports are completed in early March, and of course, if you look back in early March, we were at the early stages of the war in Iran. Fertilizer prices have been trending higher all winter for various reasons. And now with the war in Iran and the Strait of Hormuz closed and a lot of unrest over there, now there's even more concern about fertilizer and prices have went higher yet. So I think the consensus is, and I'm kind of in this camp, that that might be the highest corn acreage we see for the year, and the actual planted acreage will come in somewhat below that, and soybeans will likely go up from there as well. So. A lot of uncertainty going forward, kind of like there is every year. For us in our neighborhood, it's going to come down to weather. I think, there is a fair bit amount of spring nitrogen that needs to go on yet, so there may be a few acres that are kind of still being decided, but I think anybody who got their nitrogen put down last fall or got it prepaid last fall and has it spoken for will probably stick to the plan with corn. So I think we might see a little bit of a swing in acres. Maybe corn comes in somewhere around that 94 to 95 in the end, and soybeans come in that 85, 86. And then of course you have prevent plant considerations to think about too. And so that's all assuming we have minimal prevent plant, which is still to be determined. I think we have a pretty good chance to not have too much prevent plant, but that's going to depend on weather and as far as the central corn belt goes, pretty dry. So I doubt there'll be much prevent plant there, but a little wetter as you get farther north and west. So there is a chance there could be some prevent plant around here that could cut into that total acreage mix as well.
Ryan, could you tell our audience about the acreage report from the Department of Agriculture? What was the numbers in the report?
Yeah, I touched on that a little bit already, but I didn't mention wheat. I guess the wheat number, which is of interest to us in our geography here, because we do have a little bit of spring wheat from our area north and west, and we have some winter wheat in this area too, from our location south and west. So all wheat numbers came in a little bit lower than expectations, 43.775 for all wheat. That's versus the pre-report trade guess of 44.786. So about 1 million acres less of wheat than anticipated. And, almost a million and a half acres less than last year. Winter wheat is a lion's share of that, 32.410 million acres, and that was just slightly below the pre-report trade guess and below last year. But I think the big surprise in the report was the spring wheat acres, 9.415 million acres of spring wheat. That'd be the lowest in quite some time. I don't have the numbers in front of me, but I think they said something like the lowest since 1951 or something like that. So below 10 million acres is getting to be quite low for spring wheat. And that was about 400,000 less than the pre-report trade estimate and about 500,000 less than last year. So I think spring wheat, it's getting tougher and tougher to grow spring wheat, especially if you have a little bit higher priced corn. It pencils a little bit better. There's some guys that like it for the rotation and it will stick with it. But yeah, looking like another year where wheat acres are reduced at the expense of row crops.
Corn is king again because of lack of demand for soybean. Do you want something more like to see the full story of the fundamentals on the beans markets?
Yeah, soybeans are an interesting story right now because of that. Yeah, export demand is pretty poor relative to previous years. In February's outlook, uh, USDA outlook report, which is kind of the only numbers we have to go on right now from USDA, the first official look at the 2026 crop year won't happen until May. But yeah, exports looking forward still don't look that great. Um, Somewhere in the neighborhood of 1.7 billion bushels is kind of what USDA is predicting in the outlook for them. That would be a little bit more than last year, though. Last year, the 2025 crop year, 25-26 marketing year, sitting at 1.54 billion bushels of exports right now, and that would be a low for quite some time as well. And so China just not real active buying our soybeans. They've been heavily reliant on Brazil for their needs. Um, and for good reason. Brazil is quite a bit cheaper than ours at the export market right now. So all eyes are now on the big meeting between China and the U.S. taking place in the middle of May. That's the meeting that was postponed last month, and so looking for some sort of an agreement there where China agrees to buy some U.S. soybeans. Going to be a tough ask because of the higher price here versus Brazil, but I think there's some optimism that something will get done. I'm not entirely sure what that will be. The United States war in Iran has thrown a wrench into plans a little bit here. Don't think China's real thrilled about that. So we shall see what happens in that meeting. But yeah, the supply and demand situation for soybeans or the demand side of the ledger anyway, not all that great right now, or any forward-looking projections on demand not looking all that great. Crush demand, on
What
the other
was the
hand,
export numbers from yesterday?
So the export numbers from yesterday's report did not change. We're still sitting at, actually they did change a little bit, but they were uh, revised lower.
What is your position on economic downturn with the cattle markets with these world events and gas prices?
Yeah, the slowing economy, the higher gas prices, and all these things do have me a little bit concerned about beef demand going forward for this summer. I think we've weathered the storm with higher beef prices over the past couple years, and demand has stayed very robust and even at these higher prices. And maybe it's, of no concern. I mean, maybe the U.S. consumer loves beef so much that they're willing to pay for it at these higher prices too. But we also have not had the gasoline price shock that we've witnessed over the last month either to deal with through this whole beef rally. So it is a concern that I think we get through Memorial Day grilling season in pretty good shape, but the long-term demand going forward for beef and as long as we have high fuel prices and a struggling economy is a big concern of mine. I don't know how it's going to end up and we still have very good supply and demand situation for cattle. It's still not doing much of any herd rebuilding. Cattle on feed is down, still feeding the animals to large weights, finished weights to make up for the lack of numbers. But at some point, it feels to me like there's gonna be a point where demand does start to take a hit due to the economic situation and higher gas prices and just a little bit less disposable income. So that's a concern for me. I mean, not necessarily in the near term, but in the summer through the 4th of July grilling season into the fall, that could become more of a story.
Do you have any concerns about the consumer budget might have gonna be playing in with the war and shows at the pump?
Yeah, absolutely. And I think gas prices, you hit the nail on the head there. Gas prices are the number one concern. I mean, that's where, people still have to move about to where they need to go to work, get their kids to activities, go to whatever. I mean, a little bit of the recreational driving may take a little bit of a setback this summer. Maybe the road trip vacation miles aren't nearly as much as they have been in the past because of high gas prices. I mean, and people still need to eat too, obviously, and but they do have choices. I mean, they have choices of lower priced proteins out there, and I think that's kind of what's led this entire beef rally is just kind of the emphasis in the American diet on proteins. Over the past several years, and that's what's got beef demand really solid, which is great. It's great for the cattlemen. It's great. It's great for your diet, honestly. But at some point, there's going to be a little bit of hesitation to continue to buy high-priced beef when there's other protein alternatives out there. I mean, I hope I'm wrong. I love beef myself, and love to see that these cattle producers are doing well. It's been a long time coming. But there is a little bit of concern that cattle prices could take a setback here in the second half of this season of this year.
Do you have some final thoughts on this planting season in the cattle markets?
Yeah, this planting season, I think once we kind of get through a little bit of this volatile weather we've seen in the first half of April, I think we'll start to see corn planters roll. I mean, last Monday we had our first planting progress report, which didn't tell us much of anything because there really hasn't been too much done other than in the far southern parts of the country. But I would anticipate over the next 2, 3 weeks, we really start to see the corn planters roll and the planting progress crank up and seems like the crop is going to go into the ground in pretty good shape if the weather holds and get off to a good start. And if you look at the drought map, there are some areas, pockets of concern throughout the country, maybe even more than pockets. Large areas of the country that grow a lot of our corn are a little bit on the dry side. Um, that won't become an issue unless those areas are still dry come July. So I think we have a really good chance of getting this corn crop in the ground in a timely manner and off to a good start. What happens from there is anybody's guess, and that's going to determine the market action. Um, Soybeans, kind of the same story. Of course, they don't need their rain till August, so they have a little bit more time. But I do think we see a little bit of a swing of acres from corn to soybeans, from what we saw in the March 31st planting intentions report, and we'll go from there. And a lot of the price action, as it is every year, is going to be dependent on summertime weather. I mean, both balance sheets still need to produce a trend line crop, even with the lower demand in soybeans, still need to produce a trend line crop to keep that carryout comfortable. So all eyes as soon as we get through planting season are going to turn to the weather. And we're going to trade based off those forecasts, just like every other year.
Thanks, Ryan. I enjoyed our conversation for today.
You bet, Caesar. Thanks again for having me, and um, good luck to everybody out there in planting season and stay safe.
This is Ryan Wager from Bolt Marketing LLC on Back Roads of Illinois.